who's going to give you like a couple mini lessons on different things. Last period was very interactive, lots of questions. No question is a silly question. Use the knowledge we have today that we have the pleasure of having to answer those questions, because y'all know I'm not the real answer, okay? So ask them today, okay? So if you recognize him, Lance Claysmile Smith, who was here last semester, is a lifestyle entrepreneur, which means he builds businesses based on his passions. His company, Claysmile, is involved in several industries, such as bookkeeping, tax planning, financial education, real estate, motivational speaking, dance fitness, dance party entertainment, and video editing. Lance specializes in being an educator on the topics of mental health and financial wellness. He is a realtor and a money coach, helping people organize their finances so that they can optimize their lifestyle and maximize their potential. He created an online course called Financial Blueprint, which is a step-by-step guide teaching people how to achieve financial freedom by maximizing their credit score, managing their finances, minimizing their taxes, and multiplying their money. In addition, he is a mental health educator and dance fitness instructor, and has created an online course called Bring Your Own Sunshine, which is a series of engaging, uplifting, thought-provoking, and exhilarating stories and illustrations that promote a healthy and happy mindset. Today, he is going to be talking to you about financial wellness. So please join me in welcoming Lance Claysmile.
Thank you, thank you. Oh, I really appreciate Ms. Gio for allowing me to come in today and share this workshop with you guys. Really, really grateful. And you know, for the past classes, the previous classes, we've been running out of time because there's so much material. So I'm gonna jump right in. You have your notes piece of paper. Everyone, please take out your notes piece of paper. And for this first activity, please respond to this question, all right? There's no wrong or right answer, but just want to hear your ideas, all right? But let's say that 100 people would represent the whole population of 65-year-olds in the United States, okay? Then 54% would be dependent, you know, for their living. They would be dependent on others. 36% of them will still be working. 5% will be deceased. 4% will be financially okay. And only 1%, 1 out of 100, would be financially wealthy, okay? Now here's the question. Why do you think that 95% fail when it comes to their finances? All right, time. Now, can we get at least a few volunteers to just share? And like I said, there's no wrong or right answers. I just wanted to hear some ideas, all right? So who's a volunteer that can share with us? What's an idea regarding why 95% fail regarding their finances?
Zach's got an idea. Go ahead, Zach.
Alright, so basically, people like overspend a lot of their money, I feel like.
Yes, they overspend, right? Because a lot of people are not doing a budget, they're not planning, right? So a lot of people are overspending. Yes, excellent. All right, what's another reason? Oh, we get two more.
People don't save their money.
People don't save, right? They're not saving enough, right? Very good. Yes, absolutely. All right, and what's at least one more?
No investing.
Right, they're not investing, right? Because you got to get to a level where your money is making money for you, right? You can't just always be working for your money, right? And we're going to talk later about how, you know, active income is when you are working for your money, but passive income is when your money is working for you, right? And so, and to be able to retire, like when will we be able to financially retire, right? We can retire when our passive income exceeds our cost of living, right? Because when our passive income exceeds our cost of living, that means that we don't need to work. And at that point, we can work because we want to work, not because we have to work, right? So that's an awesome thing. So, all right, here's the thing. Also, here's, you know, three things, three of the reasons, and this relates to what you guys said. Number one, no financial education. Number two, no financial game plan. And number three, no financial coach, no mentor, you know, right? No guidance, right? All right. Now, special instructions. on your notes piece of paper as well, what I'd like you to do is whenever you hear a piece of insight that is useful, please write it down on your notes piece of paper. That's important because towards the end of this presentation, we're going to do an activity, and each person will need to have a list of pieces of insightful information on their notes piece of paper. All right? Awesome. Now, let's go through this thing here. This is called the 7 types of income streams. 7 types of income streams. Okay, the first type is W-2 income. W-2 income is income from work that you do as an employee, right? It's called W-2 income because as an employee, you receive a tax form called a W-2, at the end of each year, right? And so this type of income is active income, which means, right, you're trading your time for money, right? And this type of income is also the most heavily taxed type of income, right? Now, what are some examples of W-2 income, right? Just regular jobs, right? Regular jobs, right? They are W-2 income. So any type of job in which you are an employee, that is a W-2 income job, right? Now, next type is business income. Income from operating a business, right? The advantage regarding this type of income is that the IRS allows business owners to take a wide range of tax deductions that lower taxable income, right? Because the tax code is designed to benefit business owners and investors, right? Which is why, you might hear about how sometimes there's a lot of wealthy people that don't pay any taxes, right? Have you heard of that? Have you heard of examples of that where there's a lot of wealthy people don't pay a lot of taxes, and the reason why a lot of wealthy people are not the reason why that a lot of wealthy people don't have to pay a lot of taxes is because they are business owners or investors, right? Because there's a lot of tax benefits for business owners and investors, right? All right, now. Here's the thing about business income. Business income can be active income or it could be passive income based on how it's structured, okay? So if you have a business, if you own a business, and if you are working in the business, if you're actually doing work in the business, then it is active income because you are trading your time for money. But if you are hiring people to work your business for you, okay, suppose you're hiring people to work your business for you and you're hiring managers and supervisors to supervise the workers, right? Then it becomes passive income because you're not actively working in the business. You just own the business and the business is working for you, right? So, but obviously you still have to kind of oversee it though, right? But it's passive. It's more passive. All right. The third type is interest income. This type is passive in nature because it's basically where your money is making money for you, right? It's where your money is making interest, right? So an example of that is high yield savings accounts. How many of you have a savings account, a bank savings account? You have a bank savings account? Okay. And you know that most savings accounts, right, many of them pay interest, right? Now here's something you want to take a note of, right? Because a lot of people don't do this. Ask how much interest your savings account is making. You know what I'm saying? Like ask the bank how much interest your money is making in the savings account, because different banks pay different amounts of interest on their savings accounts, and you want to get a savings account that's paying you a the highest interest rate, right? Possible, right? And so there's something called high yield savings accounts, and these are savings accounts that pay relatively high interest compared to other savings accounts, right? So for example, just to give you a frame of reference, Capital One Bank is a very popular bank in our area, right? And Capital One Bank has a high yield savings account that pays around 3% annual interest, right? And it's paid monthly, right? But it's 3% APR, annual percentage rate. So that's something to look into. To see, like research to see how much interest your savings account is paying you, and compare that with other high yield savings accounts from other banks. All right. All right. So that's interest income. All right. Now the next two, dividend income and capital gains income, that relates to different things. But like an example of that would be stock market investments, right? Because like in the stock market, right, you can get dividend income, right, from the shares of stock, as well as capital gains, which means that like the value of the stock has increased, right? So that's an example. Also for capital gains, another example of capital gains is real estate, right? You buy a property for a certain amount and then it appreciates in value, it goes up in value, right? And so you have capital gains, right? So it's where there's an increase in the value of the asset. Next form, and the next type of income is rental income. This is the income from the rental of assets, such as real estate, cars, equipment, etc., right? But the most common example, I guess you could say, would be like rental properties, right? Like Airbnb, right? Like and other types of short-term rentals, or even like long-term rentals, right? It's rental income. So now the last one is royalty income. This is income from selling the rights to use an asset, such as intellectual property, right? What are some examples of intellectual properties? Like books, like if you write a book, or if you create an online course, or if you create a YouTube channel and create videos that get a lot of watch time hours, right? Then that's like, you can get royalty income off of that intellectual property, right? And it's passive income. Although you have to do a lot of work up front to create it, but once it's created, then it just works for you, right? And you don't have to trade your time for the money. It's the asset, right? The intellectual property that is working for you, all right? So those are the 7 types of income streams. Now, in this next writing activity, here's what I want you to do. I'd like for you to think about this question. What are at least 3 examples of skills, hobbies, and or passions of yours that can be monetized, right? Because really, if you think about it, like every hobby can be turned into a business if you package it and market it correctly, right? Now here's some examples, okay? Like, let's say you like teaching, that can be monetized. Let's say you like writing. Let's say you like public speaking or singing or dancing or dance fitness or personal training or video editing, coaching, tutoring, cooking, baking, event planning, auto mechanics, home repair, arts and craft, right? So think about some examples of skills, hobbies, and or passions of yours that can be monetized. And when I say monetized, it doesn't necessarily mean, monetized as a business. It could be monetized as a job. You know what I'm saying? Like, you could get a job, like maybe, engineering, and you can get a job as an engineer, so it could be either as your own business, or it could be as an employee. But just think of some examples of that. So let's take like 30 seconds, notes piece of paper, write down at least, write as many as you can, but write down at least 3 examples of skills, hobbies, and or passions that can be monetized.
Write this down because you'll share it. I gave you some ideas from what students last period said and what I see common high school students doing. But think about it now in perspective of your hobbies. What are you really good at? What could you do? How could you use that to make money?
All right. Now, here's what I like to do. I like to go around the room and like to give each person an opportunity to share with the whole group, all right, some of their examples. And don't worry, if you only have 1 example, that's fine. You know what I'm saying? But, I mean, if you have at least 3, that's great. But if you have at least 1, that's okay too, okay? What I like to do is this. We'll go around, but here's the thing. I mean, if you really don't want to share, that's fine. You can just, like, wave, and just say skip, and Miss Gio will skip you, okay? So here's what I want you to do. when it comes to your time, if you want to share, I'd like for you to stand up, tell us your name, and tell us some examples of skills, hobbies, and or passions of yours that you think can be monetized in the future. All right?
All right, I'm gonna go back to front. So Didier, you got anything? You can say pass if you don't, but if you have something. If you can say one thing, you don't have to read.
Yeah.
Just say who you are, name, last thing you do.
My name is Leah. I like helping others medically and writing.
Awesome.
Ready? Something teacher. You heard it. Okay.
Awesome. Yes, got it.
Go ahead. If you have any.
My name is Alvin, and I like to
Dance. Go.
Dancing. I like that. Go ahead, Jack.
My name is Sean. I say coaching and teaching.
Awesome.
Ready? Okay.
My name is Juana, and I said babysitting.
Babysitting.
Awesome.
My name is Alvin, and I said dog walking.
Dog walking.
Dog walking.
Go ahead.
My name is Joel, and I like to mow lawn.
Lawn mowing.
Lawn mowing. Awesome.
Okay. Michael.
My name is Michael, and I say
Coaching. Good.
my name is Noah, and I like to golf.
Golf.
Cough.
Golf. Good. Okay.
My name is Ivan, and I like mowing lawns.
Mowing.
Good.
My name is Thomas, and I say
Painting.
Painting.
my name is Jackson, and I say guitar playing.
Huh?
Guitar playing.
Guitar playing. That's
Guitar.
good.
Wow.
Right.
Simon, and I said art and music.
Simon said art and music.
Liquid, I said like sports or music.
Yeah, sports, babysitting.
My name is Alexa. I like animals, so probably Texas.
Animals. Good.
I'm Andrew, I said coaching.
Coaching.
I'm Ella, and I said writing.
Writing.
I'm Kira, and I said baking.
Baking.
I'm Jenny, and I said babysitting.
Nice.
I'm Ella, and I said helping with kids.
Helping kids with babies. You got babysitting. On it.
I'm Daniel, and I said tutoring.
Tutoring. Got it. No. Okay, that's it.
Awesome. Very good. Hey, I got a few comments. Okay, the person that said tutoring, all right, and coaching and stuff, right? Please write down this website. It's yzant.com. So it's W as in water, Y as in yellow, Z as in zebra, A as in apple, N as in Nancy, T as in teacher.com. yzant.com. Because the reason why I say yzant.com, it's a platform where if you have any type of skill that you teach or subject that you teach, even if you are like good at math and you're interested in teaching like middle school students in math virtually through Zoom, you can go on yzant.com, create a profile, and people can hire you to tutor them through Zoom or in person or whatever, but I'm just thinking, just wanted to share that with you. yzant.com. There's so many things that you could even start now to generate income, streams of income based on things that you love and enjoy to do, And I'd love for you to start thinking about that, because really, if you think about it, the best situation in terms of your career is if you're doing work that you love, right? Because if you're doing work that you love, then it doesn't feel like work. It's like you're getting paid to do what you love. Isn't that the best ideal situation, So that's awesome. Also, the person who said guitar playing, all right? Now, are you currently how experienced are you with the guitar?
You mean
Like, how good are you at the guitar? How long have you played?
Yeah, how long have you been playing the guitar?
like 3 years?
3 years? Okay, cool. So 3 years. So look, even at this level, you could consider starting a guitar tutoring business. There might be people in your neighborhood, kids in your neighborhood that would love to start, learning how to play the guitar, and maybe you could tutor them. You know what I'm saying? So I'm just throwing out ideas in terms of ways in which you can monetize your passions, right? Monetize your skills, monetize your hobbies, All right, and one more thing before we move on. a couple people said babysitting. All right, and so I was wondering, are any of you actively doing babysitting like right now?
Anyone babysit? Got a couple hands.
There are a couple of hands. Okay, good. That's awesome. So it's amazing how you can there's so many ways in which you can monetize your skills and your hobbies and stuff. So that's awesome. So now, here's what I could do. And so this is like a form where it's like, what income streams do you envision having 20 years from now? So W-2 income would be like, like jobs that you envision working as an employee, right? Business income would be the businesses that you envision yourself having, right? As a business, like a side business or a full-time business or whatever. You can have multiple businesses, right? Interest income would be like, like the high yield savings accounts, right? Then dividend income and capital gains, that would be more like with the stock market investing and the real estate investing, right? And by the way, the three most powerful tools for building wealth are number 1, business ownership, number 2, the stock market, and number 3, real estate. Those are the 3 most powerful tools for building wealth. If you think about it, if you study any wealthy person, you'll see at least one, and a lot of times all 3 of those things: business ownership, the stock market, and real estate. All right, so dividend income, capital gains, that's like stock market, capital gains, real estate, rental income, that's like real estate, right? Royalty income, right? Which is like books and online courses, intellectual property, right? So that's good. So now, let's see. Okay. Now here's the thing. Somebody mentioned early on about, why a lot of people go broke is because, they weren't managing their money, right? And so really, really powerful is everybody should be doing a budget for every month before the month begins. Before the month begins, you should always do a budget. And you could do it either writing it out on a piece of paper, or you could use a spreadsheet, right? Or you can use one of the fancy, apps. There's different apps you can use, right? And so there's something called the zero-based budget. And basically all it is this. Before the month begins, you're going to write out the income that you plan to receive during that upcoming month. And then also you plan, you want to write out all of the expenses that you expect to have during that month, right? And you want to allocate all of your income into all the different categories. And notice that, a lot of these are like, expenses, but then, you got some here like saving and investing, right? And so hopefully after you have accounted for all of your expenses, hopefully there's money left over so that you can put a lot of money into your savings category and in your investing category, right? Because you want to start investing early, right? It's so important because of the power of compound interest. You want to start investing early. Let's see. Banking basic. Oh, this is about bank accounts, interest. Okay, credit score. Okay, let's jump to, let's see, stock market. Stock market investing. Okay, so here's the thing. What is the stock market? The stock market is a market where you can buy and sell shares of stock. All right? Now, what are shares of stock? A share of stock is a piece of ownership. That's what it is. A piece of ownership of a company. All right? So when you buy a share of stock, you are buying a piece of the ownership of that company, right? It's a very small piece, but you're buying a piece of that company, right? Now, the size of one share depends on the total number of shares. So if you own 2 shares of a company that has a total number of shares of 10 shares, what percentage do you own? If you own 2 shares and the total shares is 10 shares, what percentage do you own?
Say loud.
20%. That's right. But if you suppose that you own 5 shares and the total shares is 100 shares, how many? What percentage do you own? 5 shares, but the total shares is 100 shares. 5%, right? Okay, so you get it, right? So it depends on the size. The size of one share depends on the total number of shares. Okay, and so owning shares. Now, here's the thing. Let's jump down here. Investing is very risky if you're investing into individual stocks. Why is it risky when you invest into individual stocks?
Because if the stock does bad, you lose money.
Yeah. If the stock goes bankrupt, you've lost all your money, right? The stock, I mean, like, you know what I'm saying? Like the company could go bankrupt, you know what I'm saying? You could lose all your money, right? So here's the thing. That is why diversification is super important. So always remember, when you're starting to get into stock market investing, always remember diversification is very important because it makes your investment safer. All right. Now, what is diversification? Diversification is the technique of spreading your investments around over many assets so that your exposure to any one asset is limited. Right? Now, when I say assets, I mean the corporations in this context. Right? So that's why a mutual fund is safer than individual stock. Now, what is a mutual fund? A mutual fund is a collection of stocks, right? So when you invest in a mutual fund, you are investing in a collection of stocks instead of investing into just one stock, right? So therefore, instead of buying shares of individual stocks, it is safer to buy shares of a mutual fund because each share of a stock mutual fund, each share of a mutual fund represents a diversified portfolio of stocks. So it's safer because even if some of the companies go bankrupt, it's okay because other companies are doing good. You know what I'm saying? It's like, so it's like it balances out and you can look at the history of mutual funds and, different types of mutual funds and you'll see that it goes up and down. The stock market goes up and down, but over the long term, it always goes up, right? But it's important to diversify, right? Because not all companies survive, right? So I would recommend index funds. Now, what are index funds? Index funds are a type of mutual fund whose holdings match a particular market index. For example, there's a market index called the S&P 500 index. And what the S&P 500 index is basically it's 500 of the top United States companies, right? So 500 of the top corporations of the United States are in this market index called the S&P 500 index. And if you invest in a mutual fund that is an index fund that tracks the S&P 500, right? Then you are investing in those 500 companies, right? That's a small piece of each one, but you're investing in 500. So it's safer, right? Because you're investing in the top, companies of the United States. There's other market indexes, like there's a total market index. There's different types of index funds. But basically, the basic principle is that when you invest in an index fund, you're investing in all of the corporations that are in that particular market index. Okay, and as I said, one of the most popular index funds is the S&P 500. Now, different investment brokerages offer offer index funds that track the S&P 500. So it's not just one unique mutual fund, right? It's a type of mutual fund, right? So something to look into, But the main point out of all this is when you invest in the stock market, make sure you diversify your investments, meaning invest in a wide variety of stocks instead of just one individual stock. All right, so that's stock market. Let's see. Okay, let's run to, we talked about that. Let's run to one of the topics I know at your age would be like buying a car, right? So let's talk about buying a car. There's different perspectives about car buying. I just want to share with you some ideas, all right? So number one is I believe that buying a used car is better than buying a new car because when done correctly, you get more value for your money, right? Because a brand new car immediately loses between 9 to 11% of its value immediately, right? Now, and also the cost of car insurance is higher on new cars, right? So I recommend that you consider buying a used car that is like maybe 2 to 3 years old, but has under 50,000 miles. So it's slightly used because, you know, you can get a really good deal when it's like a slightly used car, right? Now, here's some tips, right? You always want to check the Kelley Blue Book value, all right? So please write down this website. It's www.kbb. That stands for Kelley Blue Book. So www.kbb.com. And when you go on that website, you can input the characteristics of any type of car, like, you know, the make, the model, the year, the mileage, and the website will give you a general estimated price range of the market value of that type of vehicle. So it's a really cool tool for you to start thinking about, you know, how much the market value will be for different types of cars, of different years, and of different mileage, right? Now, when you are actively car shopping for a used car, you want to make sure that you always check the car's vehicle history report. The car's vehicle history report. You can get something called the Carfax. The Carfax, which is the vehicle history report. All right? And so basically, it's a report that provides the ownership and the accident history, the mileage, the title status, and more. It's like a report of the history of the car. Now, of course, there's certain things that could have happened that does not show up on the vehicle history report, right? Because it might have been hidden, might not have gotten reported. But there's other things that will be on there, right? So it's always good to get the vehicle history report to see if there's any red flags regarding the history of that car, right? And then number 5, now there's 2 ways, right, to buy a used car. One is to go to a car dealership that sells used cars, or another way is to purchase it from a private seller, like directly. Like you know, there's Craigslist, there's Facebook Marketplace, there's, you know, different, you know, ways that you can just buy a used car directly from a private seller. If you go the route of dealing with salespeople, be careful of like the tricky sales tactics, right? Now, if you purchase a car from a private seller, here's some questions to ask. You know, ask them why they're selling the car. Also, ask them if there's any additional information that was not in the description, right? Now, of course, they might not, you know, be totally truthful to you, but at least these are questions you can kind of ask, right? Now, number 7, and this is probably the most important one of all, is in addition to analyzing the vehicle history report, right, you get the Carfax, make sure that you also hire a mechanic to do a pre-purchase car inspection, right? And by the way, you know, having a good mechanic is very, very important. You know, when you become a car owner, right, it's very important to find a mechanic that you know and that you trust, right? And so you might have a family member, or you might have a friend, or you might have you might have friends that might be able to refer you to a good mechanic. You know, make sure that you get a good mechanic. But yeah, so before you buy a used car, make sure you do a pre-purchase car inspection. Check out this website. It's called www.yourmechanic.com. And on that website, you can read about a pre-purchase car inspection. You can read about all the different things that are done during a pre-purchase car inspection. Because maybe you could even, like, you know, send that information to your mechanic when they do the inspection for you, you know? So that's about buying a car, So real quick, on your notes piece of paper, you wrote down useful insights, all right? Can we have like a couple volunteers, right before we go into the feedback, a few volunteers to share what is one piece of useful information that you will take with you from this presentation? Somebody.
To ask your bank how much interest you're getting, like from your savings account.
Yes, very good, very good. Because you know, over time, it makes a huge difference, you know? So yeah, very good. And then now just to add to that, ask them about a high yield savings account. Yeah, high yield savings accounts. And yeah, ask them how much interest, and also ask them, ask them how much interest is being generated. Because you might want to switch banks. If they're not paying you a lot of interest, you might want to switch to a different bank that is offering you a high yield savings account that's paying more interest, right? And like I said, Capital One is offering like around, it's like over 3%, you know, so. All right, very good. All right, at least one more piece of useful information.
How to buy a car?
Yes, how to buy a car. Yes. Very good. Awesome. Okay, all right, so now if everybody can respond to the feedback questions.
I know you don't have a lot of time, but in a nutshell, what's a Roth IRA?
Ah, perfect. Okay, yeah, Roth IRA. It is one of the most important investments that everyone should have, especially start early to have it. So now, an IRA is an individual retirement account, and there are several different types of IRAs. Two of the most well-known types are traditional IRAs and Roth IRAs, all right? Now, Roth IRAs, it's where the contributions are not tax deductible, right? So when you contribute to your Roth IRA, you do not get a tax benefit, you know, right now. However, when you withdraw money from your Roth IRA later on, like during your retirement years, when you withdraw money from your Roth IRA, it's tax-free, right? So that's the benefit of the Roth IRA, is that it grows tax-free, and when you withdraw the money from your Roth IRA, it's also tax-free, right? So definitely everybody should look up Roth IRAs because you want to start early to invest into a Roth IRA. You know, also too, as Ms. Gio mentioned, I have a YouTube channel and I talk a lot about Roth IRAs on my YouTube channel. So please check out my YouTube channel. You go to YouTube, keyword search Claysmile.
All right, if we could please give Lance a round of applause for being with us.
Thank you. Thank you.
All right, if you could give me your feedback form, make sure I get it, all right? If you could just stay seated until the bell rings, because I don't want this to get clogged up with these desks here. Once the bell rings, y'all can go, obviously.
Miss Gio, thank you so much for having me. Yes.
I will leave this with the main office.
Perfect.
For you to pick up, so.
Perfect. Thank you. All right, talk to you later. All right, bye.